Welcome back to the Deep Dive. You gave us the sources, and today we are really getting into it. We're looking at the Q4 fiscal 2025 earnings call for analog devices, or ADI.
And what a time to be looking at it. I mean, if you just watched the tape that day, the stock just took off. It hit new 52-week highs almost immediately after the results came out.
Right.
It felt like, this wasn't just another strong quarter. This was the market getting the proof it needed for that industrial semiconductor supercycle idea everyone's been betting on.
So that's our mission today then, to figure out what's really behind that conviction. It was a classic beat and raise, no doubt, but let's, get past the headline numbers. What was the big picture on revenue and earnings?
Well, big is definitely the right word. Revenue just roared in at a little over $3 billion for the quarter, and that was a huge 26% jump year over year.
26%.
But the real kicker was the bottom line. The adjusted EPS, it absolutely surged, up an incredible 35% compared to the same quarter last year.
And 35% EPS growth is, it's massive for a company this size. And that wasn't just a one-off for the quarter, right? This defined their whole year.
Exactly. For the full year, revenue was up 17% to $11 billion. But the number that really tells the story, especially if you care about quality, is the cash generation.
The free cash flow.
Free cash flow.
Yeah.
It hit a record $4.3 billion. That's an amazing 39% of their total revenue. And crucially, they gave almost all of it, 96%, right back to shareholders through buybacks and dividends.
That is just the definition of a resilient business. Growth that feeds cash, which then directly rewards shareholders. Management called it, I think, capping a robust year of both cyclical and idiosyncratic growth.
Yeah, and that's a key phrase.
The cyclical part I get, the market's improving. But what does idiosyncratic really mean to you in this context?
It means they're winning on their own merits. They're getting designed into new products, product-specific wins that have nothing to do with the broader economy, especially in things like AI, power management, and factory automation. That's creating momentum that's unique to ADI, and it's why they keep outpacing everyone else.
Okay, so let's break down those wins. The Q4 revenue numbers. Where was the biggest growth coming from? It looks like the industrial segment is just a monster now.
It's the engine. It's almost half their revenue, 46%, and it grew a phenomenal 34% year over year.
34%.
To $1.43 billion. And that was pretty broad, but really pushed by things like automated testing, energy, and factory automation.
And the other big segments kept up too. Automotive grew, 19%? And communications, even though it's smaller, was up 37%.
Yeah, the auto growth is all about content.
Yeah.
More chips per car, things like ADS, advanced driver assistance systems, and these new complex power solutions. They're just adding more value, so they're growing way faster than actual car production, which was pretty much flat.
And communications.
Communications is a pure AI story at this point.
Okay, let's get to profitability. This is where it gets a little technical, but it's super important. Non-GAAP gross margin hit 69.8%. And operating margin hit 43.5%.
Yeah.
Those are just premium numbers.
Absolutely premium. But the really interesting part is why gross margin didn't quite crack that symbolic 70% level this quarter.
That is a good question. Why not? Doesn't more revenue just mean better margins?
Not always. It comes down to product mix. Management pointed out that automotive, which has slightly lower margins than industrial, was actually way stronger than they'd planned.
Okay.
And since industrial is their high-margin king, that unexpected strength in auto kind of diluted the overall mix just enough to keep the gross margin a hair below 70%.
So a good problem to have, basically. Too much growth in a slightly lower margin business. But it does tell you that the path to 70+% margins depends entirely on that industrial segment staying dominant.
Precisely. Industrial is the key. It's the lever for margin expansion from here.
So let's stay on that. What are the specific catalysts inside that huge industrial business? You mentioned energy and automated testing. What's driving that 34% growth?
So energy was actually their fastest growing vertical. Think grid management, big battery storage systems. The whole electrification trend needs these complex analog chips.
Right.
And then automated test equipment, or AEE, set a new record.
And AT is directly tied to the explosion in AI hardware, isn't it?
100%. It's the key enabler. The industry is shifting really fast to this next gen of AI memory called HBM4 high bandwidth memory. It's essential for high performance computing. And that memory needs brand new, super complex testing systems.
And ADI makes the parts for those testers.
They're a primary supplier of the high-speed analog components that go into those machines. It's a huge tailwind.
Okay, and speaking of AI, let's jump over to the communication segment. That data center number is just wild.
It is. Their data center business is now running at over $1 billion a year. And get this, it's grown more than 50% year over year for 3 straight quarters. The wins are coming from the electro-optical interface. We're talking 800 gig and 1.6 terabit optical systems, and all the sophisticated power management you need to run these AI racks without them melting.
So while the data center is on fire, what about the traditional wireless side? That's been pretty weak for a while.
It's finally coming out of that inventory slump, and ADI is jumping on it with a new AI-enabled, software-defined base station on a chip. They've already got design wins with major players, so they're getting ready for the next 5G and 6G cycle.
Shifting gears a bit to strategy, one of the most interesting things they talked about was this idea of die bank buffers. They've spent over $3 billion on capex since the Maxim deal, but this seems different.
It's a huge shift in how they think about the supply chain. They're deliberately building up strategic inventory, these die bank buffers, for their most critical stuff. For AI, for industrial, for auto. They're moving away from that pure just-in-time model.
Okay, so building up inventory sounds great for customers, supply security, but inventory costs money. Aren't they worried about tying up capital, especially if the economy slows down?
That's the trade-off, absolutely. But they frame it as an investment in reliability. And at this level, for these kinds of specialized parts, reliability becomes a real competitive advantage. Their biggest customers will pay a premium for a guaranteed supply. They basically see it as an insurance policy.
It's a powerful moat then. And they're pairing that with record R&D spending.
And it's very targeted R&D. Core analog, power, and this is key, AI-infused software tools. They see software as the next big differentiator. Plus, they confirm the Maxim synergies are accelerating, and they're on track for that $1 billion target by 2027.
Let's touch back on auto really quick. How are they growing 19% when the car market is totally flat?
Purely content gains. On top of ADAS, they have this new E2B Ethernet bus tech that's getting adopted. It simplifies the crazy complex wiring in modern cars, which saves automakers money. And they also said they're winning significant share in the Chinese auto market specifically.
Okay, so let's look forward. The guidance is always the biggest signal, and they guided Q1 above what anyone was expecting.
Yeah, the Q1 revenue guide was strong, around $3.1 billion, and the EPS guide was solid too. But honestly, the specific dollar amounts aren't even the most important part.
So what's the real signal hidden in that guidance? Because Q1 is usually their weakest quarter.
Exactly. Historically, Q1 is seasonally weak. It's usually down mid-single digits from Q4, but ADI guided up slightly, which means Q1 2026 is on track to be the 7th straight quarter of above seasonal growth.
7th straight quarter.
That kind of sustained momentum is why the stock reacted so violently. It's not a one-time beat. It's a structural trend.
So let's break that guidance down. Where is the strength coming from in Q1?
Industrial is expected to be up above seasonal, but communications is the star again. They're guiding it up about 10% above seasonal, almost all driven by that relentless AI data center demand.
And what about auto? After such a strong Q4, it sounded like they were tapping the brakes a bit.
They were, yeah. Explicitly cautious. They mentioned macro risks, tariffs, and maybe some sales being pulled forward. So they expect auto to be down mid-single digits below seasonal in Q1. But for the full year, they still see every single market being up, with industrial and comms leading the way.
So the market just loved this. Stock pops, hits a new 52-week high. The whole industrial semi-supercycle thesis gets a big check mark from analysts.
Absolutely. The trading volume was huge, which tells you the big institutions were buying in. The company even got an upgrade from IBD into their elite tier because the growth is accelerating so much.
But here's the interesting part. How does ADI compare to the rest of the semiconductor space? If you look at the SOXX ETF, which tracks the whole sector, ADI has actually lagged it.
And that's the key disconnect right there. ADI has crushed the S&P 500, but it is trailing those high-flying AI names that drive the SOXX. And that performance gap suggests the market still hasn't fully bought into how durable ADI's growth really is.
So there's room for the valuation to expand.
Exactly. There is clear room for that multiple to expand if they keep this up. The consensus is still a moderate buy, but you're starting to see those street-high price targets creeping up toward $310.
And that target assumes that performance gap closes.
It does. It assumes that if they deliver sustained double-digit EPS growth next year, which seems plausible, that the stock has to be re-rated higher.
Okay, that brings us to our final segment. We take all this data and pitch an outrageous but plausible idea based on our deep dive. This is the part we call, "This is not financial advice."
All right, so given all the evidence, the idea is a leveraged long position. You're betting on the market finally re-rating ADI from just a stable analog company into a real AI and industrial growth story.
And the argument is based on two facts we've confirmed.
Two non-negotiable facts. One, their resilient 40+% adjusted operating margin. And two, the incredible momentum from that seventh straight quarter of above seasonal growth.
So the market is still underappreciating how long these trends can last, even after this big report.
Precisely. The drivers, AI data centers, HBM4, memory testing, defense, the Maxim synergies, these are all secular long-term trends. If they keep delivering, the stock must close that valuation gap. And you have that $4.3 billion in free cash flow as a huge fundamental backstop.
So what's the target, and what's the biggest risk?
The target is that street high number, around $310 over the next 6 to 9 months. The risk is simply what management themselves said. Caution around auto tariffs, and the macro picture could just delay the market from recognizing how well they're executing.
It's a bold pitch, but it's built on some incredibly strong data. So to wrap up our deep dive, the main takeaway is that Analog Devices is successfully pivoting into an AI-leveraged company, moving from just stabilizing to really compounding its growth at the intelligent edge.
And I'll leave you with one final thought to explore. Given ADI's explicit strategy of building those expensive die bank buffers for its fastest growing parts, how will that affect their competitive advantage and pricing power down the road? If this industrial supercycle lasts longer and gets choppier than people think, does simple supply assurance become the new ultimate moat for ADI?
Something to think about as you digest these results.
Yeah.
Thank you for joining us for this deep dive into Analog Devices Q4. We'll see you next time as we continue to explore what the numbers really mean.